Hey, it's Matt with PriceActionTradingSystem.com, and it's Monday. It's June 24th. This will be our chart lesson for today, and it was a really quiet range type day today. Um, Not much volatility at all, not much movement at all. I mean, we had this, your overnight lows are here and overnight highs are here, and we never traded outside of that today. Um, Even this very low point in the afternoon, we still didn't get outside that overnight low. So, and we stayed in this range between 29.5475 and 29.59 and a quarter. So it's about a 5 point range for the most part. Uh, we had this leg up, and when we started going higher here, I would have looked for a possible measured leg higher, but you got to get above, you got to break out above this resistance that we had here, and we couldn't do it. So once we started going lower, then you would measure the down leg and see if maybe we got a measured leg to the downside. And you can see we got that basically to the tick almost. And we just went sideways until we dropped down one more time and moved back up. And notice where that target is. It's right at the gap. There was a gap. This is where we closed the previous day. This is where we opened today. So there's a gap between here and here on the daily chart. And generally prices will try to fill that. So once we went lower, that would have been my first target, especially getting this measured move down to here. And you can see we pretty much got that, maybe a tick further, and we just kind of continued sideways and had a little failed break lower. This just turned out to be support here. It's odd how these previous day opens, highs and closes and lows and things will come back and test over and over again. So keep up with those. I particularly like to watch for this gap here because most days prices will try to fill that gap. So not always, but if it's a real strong trending day, prices never even, they just keep going in the other direction. So, but on a real flat day like this, even if we'd have got this measured move up here, it wouldn't surprise me at all if we still came down and filled that gap before the day was over. But we couldn't even get up there. So this has a downward tint to it. So the bias was really kind of down. We did bounce here, but then the buys still continue to be down. And you can see most of your trades were shorts today. There were not a lot of real good trades off the lows, and for good reason, because most of the time when you had them, they were, prices were trending downward. So you got to be real careful, and you really kind of need a higher low or a double test or something. And we just don't really get many of them. So all of those came off the high. So pretty good. There's some pretty good trades here. Nothing real spectacular. I mean, it's just really not a good trading day overall. Just kind of a quiet day. So anyway, I backed out here. Let me back out a little more. We'll talk about the trades, and it won't take long. There's a few trades, but there's not a lot today. So anyway, the 7 o'clock hour came right in here at this turn down. And notice you got a new low, and there's a first entry, and then you come back up to the trend line. You get a second entry with a nice bearish bar. I like going short there. It's good for a scalp, not much more. And then it bounces. You actually got you had just enough ticks to get out of that, and then it bounced. You might have considered going long if this bar would have made a low, because there is a second entry there. But this is really your signal bar, and that's just too bearish. This is just an inside bar, and everything really is still right at that trend line. And even though you broke out up here a couple of times, it doesn't really mean anything, because you'll see that in the overnight some, and if you're still inside that trend when the market opens, it'll a lot of times continue to play out, and even though you had some breaks during the overnight. So but really, for the most part, we're just kind of going sideways here, and we just kind of keep going sideways. And then there's some resistance up here at the highs, and you get a little failed breakout, and then you get a lower high here with a big bearish bar. I like going short there. You're going to look for prices to try to make a new low here. So even though you got some support here, you got to be careful of it. But your target is probably down here, and probably this your double bottom is really here. I like to kind of pay attention to those closes though, and that's a little bit close right there. But if you're just looking at these lows, you still got a little room, and the bias is down, and that's a big bearish bar. So you might let it break lower and drop a limit order or a tick or two in and see if you could get filled. But a lot of times you'll miss those trades doing that. But that might have been the better play until it comes back and gives you, notice you really, technically this is not a failed second entry because it bounced enough to get there, but there's really a failed, you could treat that like a failed second entry or a double test or whatever, and big bearish bar and go short again there. And I would have had this down here by now, because here's where your closes are. And I did mark this one here, this long, because you've got a bunch of bounces across here, and you could really look at this. Here's your low, first test, second test. So you could look at that as a double test. There's real strong support right there. You're a little bit away from the EMA. I'd probably skip this trade, but I marked it because I figured somebody would ask me about it anyway. So I marked it. It is a second entry long too. So you may take that trade. It's a little aggressive, but you're better off to wait on, see if you get another chance to go short here. You get another lower high here, but it's just very neutral bar and it's very big and you don't have much room there. And there's actually you could treat this like a failed second entry long, but and there is a little breakout here, but I don't think I'd go short right into that. Notice how it bounced there, and it could have bounced back up. It does go lower. I mean, it's a possibility. It's another one you could mark green, but it's just not a great setup. And even though it works, and that's what trips people up a lot of times, they'll get antsy and want to take a trade, and they'll take that trade right there, and it'll work, and then they'll take it and then the next 10 times you try to take it, it won't work. So just those are probably better off you're just better off to skip that trade, because we're really going sideways here, and even if you break lower, it's probably going to end up being a failure and come back. Even if it's only temporary, it's probably going to come back, and in this case it does come back and it keeps going. So again, you got this failed break lower, and so I'd want to wait on a higher low, which you get right here, but you didn't close back above the support resistance line. You're still below the EMA, so you got a couple of resistance areas there. That's another one I probably wouldn't take. Now if it had closed up here through all this stuff, I'd probably say yeah, take it, because we're probably headed to the other side, and we probably are anyway, but it's just not worth risking that entry right there to find out. So I think you're better off to skip that. Then you run up, you get a close outside, move to a new high, and then finally you make a lower high right here. And this actually broke higher and turns and goes out the other side. That is a really big bar, but what you might do is let it break out. If you could there's still enough room to go ahead and put a sell stop there if you wanted to, but it is a lot of room, and your stop still has to go up here above this bar. So it's a relatively big bar. But what you might do is let it break. When it broke below here, drop a limit order a couple of ticks back, and you can see it would have come back here and filled you maybe at least 2 or 3 ticks back. And that might have given you a little better entry without quite as much risk. Again, you'll miss some of the best trades doing that though, so it's always risky doing that, but it does reduce your risk at losing. You might miss a good trade risking that way, but generally you reduce your risk of loss by doing it, by dropping that limit order back up here. So because it just gives you a little more room in case it does come down to here like it did and bounces and goes the other way, you still would have had enough room to get out, where going short here you don't have enough room, and if it does bounce there, you've got another loser. So we do bounce off the lows again right here. I don't think you want to go long right here. This is not a trend line really. This is that measured move. We'll take that off. So I'd want to wait on a higher low or double bottom, and you actually get a double bottom here, and it does tick a little lower and reverse and come back, and you're still a long way from the EMA. And you can't, and this is a second entry because there's a high here, so that's a higher high. So the count would start over, first entry and then second entry, although that's not a clear 2 legs. that, even though you could count that as a second entry, that's not, you really want to see two clear legs. That's the whole idea behind second entries, is two legs. The market moves in twos. So, but being that far away from the EMA and being strong support across there, you may take that trade. Again, I think it's a little bit aggressive. I'd rather wait on the higher low, which you get right here, and you don't want to go long into that. If anything, you want to look for a short here, and notice what happens. It breaks out, comes up and tests this, breaks higher right there, turns and comes down. It doesn't go all the way through this time. So this is another one. You might let it break lower and drop a limit order a tick or two back and see if you can get a little better entry, because that's a huge bar. And you could also look at this as a double test of this level up here. This is a lot higher, but it's still this resistance across here, and you get a double test basically. You finally get a lower high here with a decent signal bar. You can go short right there. And there's actually a failed second entry long right here that you could consider, but that's right back into support, and you don't want to go short there. And you can see how it took it forever to push through. You wouldn't have got stopped out, but that's not worth riding out. That you'd probably get scared right there, and when it starts bouncing, it'd probably shake you out, and you'll exit, and then it drops right where you think it is. So that's just not a good one. I'd skip it. And then you get another not a good signal bar here. Look at that huge bar. If that was a good signal bar where you could get in a little higher, that would be a good entry, but I don't think you want to enter down here, especially with this being the signal bar. And if you'd have tried a limit order to get in back up here, it wouldn't have worked either. So you make a lower high here, but you just came off what looks like the low side and maybe even an overshoot. So I'd wait on a lower high at a very minimum. You get that here, but again, you can see it bouncing right there. You're not quite down here, but you don't have a lot of room left. Comes back again and gives you a failed second entry long. But then you get this inside bar. And you could have considered going short right there, but you're not back to this trend line. So even though it's just after the 2 o'clock, you could look at that like a double test and a failed second entry long in a downtrend. So you might go short right there. That late in the day, and actually even into the 2 o'clock hour, I'm gonna say skip it, but I'll mark it just because it's a possibility. But even if you did go short, your stop has to go above this bar. So there's your signal bar, but your entry would be one tick above the little bullish bar on the inside. So, and that was it for today. We just really ended up in the last hour or two of trading, we're just in a real tight range across there. We ended up dropping lower, but it didn't take it but a second. It's just kind of a repeat of, it's really a repeat of this right here where it drops lower and then bounces. And then you go across, drops lower and then bounces. So it's kind of a little repeat pattern. But really quiet day, because most of this was 5 points or less up here that you're trading within. And when it's like that, you got to be real careful looking at second entries and failed second entries and all that, because you just get whipsawed. You'll see a second entry and you'll take it, and then it looks like it's going to be a failure, and you reverse, and then that turns out to be a failure, and you reverse again, and then it just keeps going sideways, and then you get stuck, and or you get stopped out only to watch it turn and go exactly where you thought it was going to go to begin with. So you have to be really, really careful about failures and second entries when it's this tight of a trading range. So anyway, maybe it'll pick up tomorrow. Maybe we'll have a little better day. You know, we had some of this last week. We had some real quiet days, and then we'd get a real strong day. So maybe we'll continue to have that happen. We'll see. We'll see what tomorrow brings. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.